Welcome back. We are back with Bryden Teich. He's our featured guest of the morning for his views on U.S. fiscal policy in this conversation south of the border. Bryden, we know Donald Trump wants to cut taxes steeply. We know that trade tariffs are part of his agenda. We know less about the White House's plan for spending on the fiscal side. And you think that's a really important wild card?
Yeah, I think one of the things we've really highlighted the last couple of years is how much of an impact the fiscal spending in 2022 had on the strength and resiliency of the U.S. economy, and specifically with the CHIPS Act and the Inflation Reduction Act. And so I think what we've been waiting to see is a little bit more structured guidance on what fiscal policy might look like. And I think, a week and a half in, it's clear there's other priorities. But I think, why that's relevant for both the economy and the equity market is that there's been lots of segments of the equity market that have really benefited from a lot of that fiscal spending. So think infrastructure, data center build out, a lot of different engineering projects all throughout the U.S. that have been enabled because of this fiscal spending. And if there is a shifting of priorities or a shifting of funding, there was a news last night that they're starting to shut down some of those fiscal grants to the states. Yep. And if this starts to become a political sort of football, I think that removes a lot of the certainty with regards to those projects being done. And there's a lot of sectors within the equity market that have really benefited from that spending. And so it really creates an uncertain outlook for earnings if that condition kind of materializes here in the next couple of months. Are you
watching the Inflation Reduction Act? It had a lot of that infrastructure spending in it, did it not?
Yeah, so specifically the last administration seemed like they were really moving towards this industrial policy focus of, onshoring, bringing back manufacturing to the U.S. And so it was a clear guidance for the 2022, 2023, and 2024 of where the fiscal spending was going and where it was allocated. And I feel now that we're into a new administration, we've kind of hit a wall in terms of expectations for where that fiscal is going to be allocated to. Mm-hmm. And if some of that starts to get pulled back or reallocated, I think that removes a lot of the certainty that certain states had. And a lot of that funding is required to continue the infrastructure build out, as we've seen in the last couple of years. So it's very interesting. It'll be very interesting to watch. And, it seems like the focus right now is going to be on enshrining the tax cut, yep. And of course tariffs, but that's not fiscal policy. So, allowing the tax cuts to continue, that's not a net new stimulus, and tariffs are not going to be stimulative. You're not going to rebuild U.S. manufacturing just by tariffs, I think. And so if we see an administration focused on tariffs, trying to bring in revenue, and that becomes the story, that is a very different setup than the last couple of years with the fiscal spending in a very targeted way. And so it doesn't seem like there's as clear of guidance right now. And I think for the market, the market's not really paying attention to that right now. But I think in the next couple of months, that could be a really important thing as companies start to report earnings and sort of talk about that guidance going forward.
What sectors of the U.S. economy or U.S. stock market rather, would you be watching in this regard?
Yeah, so the sector that's really benefited is a lot of the U.S. industrials have benefited from the fiscal spending, and not just on sort of price appreciation of the stocks, and we're talking earnings too. We've had a lot of growth in earnings in that sector specifically. Renewable build out, renewing or greening the electrical grid. There's been a ton of spending, a ton of equities have benefited from that kind of spending. So really watching earnings quarter to quarter, where last year and the year before, you'd hear about record backlogs every quarter for these build outs. And if that tune starts to change in the next couple of quarters, mm-hmm. I think that there's definitely an adjustment coming for a lot of those equities, because right now that's not being priced in.
What about the so-called reshoring trend, which really is a pandemic era trend? Do you expect that to continue?
So I do, but I'm not seeing a coherent message on it right now. And I think that's the uncertain part, where with the fiscal spending, it was very clear where the money is being allocated last administration. The tariffs were still in place and they were actually raised. But if we're going to spend the next couple of years, changing tariff rates around on a monthly basis trying to do these sort of bully tactic negotiations, that's a very different way. That's not going to re-onshore U.S. manufacturing. It's going to create a lot of uncertainty. And so, and at the same time, to be fair, Scott Bessent, the U.S. Treasury Secretary, who was just confirmed the other day, he's someone that I'll be watching to very closely to see what he says in terms of the outlook, both for funding the U.S. debt, what his term structure plans are, and also, but if there's any coherent message on industrial policy. But right now, it feels like we've hit a wall with that uncertainty.
Right.
And so it'll be interesting to watch how equities start to react to that as earnings.
What's your take from a market point of view of Scott Bessent? Trump's cabinet nominees are eccentric, to say the very least. RFK Jr. today goes before hearings. I don't want to get sidetracked into that, but he is unconventional, to say the very, very least. What's your take on Scott Bessent?
So I would say I approached his nomination with skepticism, as you should approach every nomination with skepticism. And I think spending time reading his work and listening to his conversations, it's actually mind-blowing how intelligent this man is, how experienced he is. And so if there is a sort of bright spot in the administration, I definitely think that's going to be sitting with the Treasury and Scott Bessent. I think he's incredibly experienced, and he understands the big picture very well. And so having him start to articulate what the Treasury strategy is going to be, I think will be very, very interesting. I think you'll see a lot more interventionist Treasury moves this time around. I wouldn't even put it past, start to see currency interventions would be on the table in a way that we haven't seen before. I think there's a lot of things that Scott Bessent has talked about publicly in his prior career, and his views about monetary policy, fiscal policy, industrial policy, interrelationships with China. And so I think it'll be very interesting. He's the one person to be watching closely, and he's someone who should be taken very seriously.
That's Bryden Teich.